Hello everyone, welcome to today's lecture. I hope everyone has already read this topic. We are today covering audit of insurance companies. So guys, what I suggest is during the lecture, take the notes with me. Whatever I am discussing, whatever I am writing on the screen, please write it together, prepare your notes. You can amend it a bit according to your way, so that it will be very helpful for you to revise at the time of exam. Number 2, be participative. Ask as many questions as you can. Reason because that will be very helpful for you. Once you will ask questions, you will be able to understand the topic in detail. Okay, so it will enhance your clarity about the topic. So I'll request, please ask as many questions as you can. Okay, and if you have questions related to any other topic, like other than what we are discussing today, please feel free to ask. Okay, but what I will be doing is I will be accumulating those questions either at the end of the lecture or at the start of the tomorrow's lecture, like next lecture. I will be taking up those questions. Okay, so let us start the today's topic. Okay. As the name suggests, audit of insurance companies. Write it down. Insurance companies. Okay. Now we are talking about audit of insurance companies. So to understand the audit of insurance companies, first you need to understand, okay, what is an insurance company? What are the laws and regulations for the insurance company? Remember the standard way. Before starting any audit, you need to first understand the entity. Its environment, okay, in which environment the entity is doing business. What are the key things for the business? What is the business model, so that you can appropriately audit that particular company. So when I talk about insurance company, first I will be discussing what are the laws and regulations applicable to this particular insurance company, so that while auditing the company, I should be paying attention whether there are any specific regulations that I need to comply with, for which I need to see the compliance. Okay, let's say for example, in case of banking, we saw there were so many regulations that are applicable to a banking company. Same way there are regulations applicable to insurance company. So we need to see those regulations also. First, the Insurance Act. Insurance Act 1938, which is amended by the Insurance Laws Amendment Act 2015, plus their rules and regulations. Okay, so one of the area or one of the regulation which is applicable. Then Insurance Regulatory and Development Authority Act. The Insurance Regulatory and Development Authority Act. Now this is in short form we call it IRDA. IRDA is the regulator of insurance companies. The way RBI is a regulator of banks, same way IRDA is a regulator of insurance companies. So IRDA. Okay. Then the next law applicable is its regulations, rules framed by this authority. Then remember I am talking about insurance company. So whenever I say word company, by default, Companies Act will be applicable. To the extent it is not, in contrary to any of the laws and specific laws and regulations, Companies Act will be applicable. So Companies Act. Then the next applicable is IRDAI, preparation of financial statement and audit report regulations. Now, this is a very important regulation which is applicable. Reason because this specifies about the preparation and presentation of financial statement and audit of insurance companies. IRDAI, preparation of financial statements and audit report regulations. These are the some laws and regulations which are applicable to an insurance company. Okay. Now, when I'm talking about audit of the insurance company, what are the areas I'm required to look into? I need to identify, okay, which are the areas I need to see, which are the areas I need to think about before with respect to the audit of insurance company. Okay. Now, first I need to understand the laws and regulations that I mentioned already. Okay. Laws and regulations. Fine. Then I need to see what are the key terms, business model, and I need to understand the entity. Understand the entity, like what is insurance, what are the key terms in the insurance, how many types of insurance are there. So you need to understand the entity that is there. Then what you need to do is you need to understand, okay, what is the accounting reporting framework? Reporting framework applicable to company. What is reporting framework? Whether Ind AS, Indian accounting standards, normal accounting standard, or you can say whether Companies Act is applicable to which extent, in which format they are required to prepare their financial statement. Reporting framework, accounting framework, which accounting and reporting framework is applicable to them. Then what you need to do is you need to understand the key risk areas. You need to understand the key risk areas, and that you do by risk assessment. Okay. That you do by risk assessment, identification of key risk areas. Once you do that, then what you need to do is you need to identify and prepare accordingly audit plan. Audit plan for each of the areas, including key risk areas. Once you prepare the audit plan, you need to perform the audit. Execution will be there. Execution of audit. You will do testing, you will do vouching, verification, all those activities. Okay. And once you perform execution, then the next step will be reporting. You will prepare audit report. So it will be reporting. So these all areas will be come into your come into the picture when you will be performing the audit. There is one more area which is specifically, I did not write it here, I'll write it now, which is without which it is not possible to start any audit, is acceptance and continuance. Client acceptance and continuance. Okay. Now, this is the way, before starting any audit, you see how you start, whether you can, accept the client or not. So client acceptance and continuance is very important. So this is how you carry out the audit. Okay. Now, now we will understand each area in in a bit, so that we can understand how an audit is carried out in the environment of insurance company. Client acceptance and continuance, we have discussed multiple times, and we will also discuss in detail about this particular thing when we will be discussing standards on audits. Okay. So when we'll discuss standards, we will discuss this particular area, how to do client acceptance, what are the things we need to take care while accepting an engagement, accepting new engagement, ongoing engagement. So there are multiple things we'll look into at that time for client acceptance and continuance. Laws and regulations, we already saw which are laws and regulations applicable. But over the time, when we'll discuss other topics also, we'll see some of the glimpse of the laws and regulations. Understand the entity. Okay. First, understand the entity means what we'll do is understand the business, terms, and environment. Okay. So, understanding the entity. In the case of insurance, there are three, or you can say there are two major parties. One, insurer. Okay. Insurer is a guy basically who is providing the insurance, and second is a policy holder. So policy holder is a guy who is taking the policy. So insurer, the definition of insurer is covered under section 2(9) of Insurance Act, whereas the policyholder definition is covered under section 2(2) of the Insurance Act. Okay. Now, when I say insurer can be Indian company, it can be a statutory body established by an act. So statutory body. Now you give me an example. What do you mean? What can be a statutory body in insurance environment? Indian company, there are various insurance Indian companies. Now you tell me a classic example of a statutory body in the insurance sector. Meanwhile, we will see the next one, which is Insurance Cooperative Society. And then foreign company engaged in the business of reinsurance. Okay. Engaged in reinsurance. So these types of the companies are there to carry out the business of insurance. Now, when I say Indian company, Companies Act will be applicable. When I say statutory body, the respective legislation will be applicable. When I say Insurance Cooperative Society, Cooperative Societies Act will be applicable. When I say foreign company, the provisions of Companies Act with respect to the foreign company will be applicable. So based on the type of the structure of the entity, the respective laws and regulation will change. I hope it is clear. Absolutely correct, Jay. So the classic example for statutory body is LIC, Life Insurance Corporation. Okay. So before commencing any business of insurance, okay, a certificate of registration, okay, is required to be obtained as per the Insurance Act. So unless and until you don't have a certificate of registration with the IRDAI, you cannot commence a business of insurance. So to commence the business, of insurance, certification of registration is mandatory. Okay, that's my as per section 3 of Insurance Act. Why I am discussing these provision is these are the basic provision which will help me understanding the entity. Like when you will audit an insurance company, let's say today I'm saying you, okay, let's start the audit of Reliance General Insurance or XYZ General Insurance. What you will see, other than the balance sheet P&L, there are things that we are required to audit. I can give you a balance sheet P&L. Okay, this is the balance sheet P&L. But in that, will you be able to identify whether the company has a valid certificate of registration? Whether you will be able to identify from the balance sheet P&L during the whole year whether the registration was intact or not. That's why it is very important for us to understand these provisions, because based on these provisions, there are certain audit procedures which you can say, basically are related with the compliance of laws and regulations that you cannot easily identify from the face of financial statement. But still, you are required to verify these areas. Okay. The next is my minimum capital requirement. For an insurance company, the minimum capital should be my rupees 100 crore. Minimum capital that is there, 100 crores. And that should be excluding my preliminary expenses and formation cost. So, excluding preliminary expenses and formation cost. Okay. So after formation cost and after expending on the preliminary expenses, whatever amount is left should be more than my 100 CR. Okay. Plus, they are required to maintain minimum solvency ratio. Now, what is minimum solvency ratio? Minimum solvency ratio, you can say excess of assets over liabilities. So when you say excess assets minus liability, so that's a minimum solvency ratio. Now what they are saying that the minimum solvency ratio should be 150%. That means your asset just a minute. Yeah, asset divided by liability should be your 150% minimum. That's your solvency ratio. Okay. Now, this was with respect to some of the laws and regulations that we were looking into. Now we'll understand a basic about the business that insurance company carry out. Okay. What are the type of products? So I'll just a brief about the product. I'll not go into much detail because most of the people, most of you will be aware about these things. We already seen, accounting with respect in IPCC. Okay. Types of product. Just a brief I'll discuss. So first is term plan or the standard protection plan. What is term plan? Basically, for a particular term, you will be covered under the insurance. That's a term plan. Okay. Traditional life insurance product. And once a person dies, he gets a benefit. Endowment plan. What is endowment plan? In this particular type of plan, what happens is you are covered in the insurance, but at the end of the term also you get the amount back. So coverage is there. Plus money back. Okay, here coverage is there. Then money back plan. They are basically, more into providing money at equal installment. Then whole life insurance product. Whole life insurance product means you are covered till 99 years. By default, whenever you will die, you will get the money. Whole life insurance. ULIP plan. So your plan value, like for example, if you are today taking an insurance, then there is a group policies. Group policies is you take a plan for more than, for a larger group together. Like in a case of corporates, we have an employee insurance, group employee insurance. So for each and every individual employee, we do not take an insurance. We take insurance for whole group of the employees. Okay, so all the employees are by default covered under one single insurance policy. It's a group policy. So these are the products of insurance. Okay. Now, we will discuss certain areas also, like, just a brief about, particular certain areas. And then we'll move forward to the next topic. Okay. So which are the critical areas in case of an insurance company? Critical areas like that can be, have a higher risk and that are required to be require some additional attention. One, premiums. Okay. Why premiums? Because it's a prime income of insurance company that the premium they receive. Then acquisition cost. Now, what is the acquisition cost? It's not related to mergers and acquisitions, but this acquisition cost is related to acquisition of customers. Like, for acquisition of customer, whatever cost it incurred for new contracts, policies. Third, claims against companies. Okay. Then fourth, valuations of policies. Then fifth, policies and claims. Valuation of investment. Again, critical area. Okay, there can be various type of investments. Then loans. These are the certain areas where there is a higher risk and we will be paying attention more to these areas. Cash and bank balance. Okay. We'll discuss in detail when we will discuss about the audit procedures. So that's some critical areas that we will be discussing. So this was regarding, understanding the entity a bit of. Okay. Now, reporting framework. What is the reporting framework applicable to this particular company? That's the very important thing, and we'll see in detail. Okay. Now, as per the regulations that IRDA, preparation of financial statement and audit of auditors report, regulation 2002. As per that regulation, the applicable accounting framework will be accounting standards issued by ICA. Applicable reporting framework. Okay. So the accounting framework which is applicable is accounting standards. Accounting standards issued by ICAI that are required to be followed. Why not NDS? Reason, because remember there is an exemption in the NDS. So NDS as of now it's not applicable to the insurance companies. That's why accounting standard issued by ICAI, they are applicable. Okay. But there are two changes in this. Change number 1. Cash flow statement, that is AS3. Okay, is required to be prepared based on the direct method. So direct method is required to be used for preparation of cash flow statement in case of insurance companies. Second change, AS17. Now what is AS17, guys? Segment reporting. Okay, irrespective of the, regarding your listing, turnover, different segments, this particular standard is applicable. So applicable to all insurers. Okay, irrespective whether you have multiple segments or not, whether what is your turnover, whether you are listed or not, applicable to all insurance. Plus AS3, you are required to prepare the cash flow statement based on the direct method. These are the two things that are, with respect to the accounting standard change in the for insurance company. Any doubt? Okay. Now, there are certain more areas that will be have some specific accounting treatments. For example, premium. Why we are understanding this reason? Because if you understand what is the accounting treatment and how they are recorded, you will be able to carry out the audit accordingly. Okay. So when I say premium are recognized as income when they are due, recognized when they are due. But there is one more thing that is very important to understand with respect to the insurance companies is there is a section. Okay. You can say section 64 VB. Very important section of the Insurance Act. Now, this section says that no insurer shall assume any risk in respect of any insurance business on which the premium is still not paid. Okay. So, if I summarize, if premium is not paid, then insurer shall not assume the risk. What do you mean by assume the risk? Assume the risk means you can say in other words that okay, he should accept the policy or provide the coverage, risk coverage. Means till the time I have not paid a premium, I will not be covered under the insurance. Although I have taken the policy, documentation is complete, till the time I have not paid the premium, no risk can be recorded against any of the policy, or no risk shall be assumed against any of the policy till the time the premium is not paid. That's why most of the insurance companies take premium in advance. Like before you can enroll for the policy, you need to pay the premium. Clear? That's a very important section to understand. So when you will do audit of premiums, at that time, this is very important. So without premium being paid, an insurer cannot assume the risk of the policy. Okay. Then there are certain areas like, acquisition cost. They shall be expensed in the year or in the period in which they are incurred. Claims are required to be recognized when, based on their valuation, settlement cost. Actuarial valuation of liabilities, you are required to get an estimated liability actuarial valuation. Then valuation of investments, how you are required to value investments. Well, I'll just give a glimpse. So in investment, there can be, real estate investment property. Now, for example, I have a building. Now, how to value that building? What is the value? Let's say, for example, I have a building in Delhi, prime location. I have a building in Mumbai, in prime location. Let's say Bandra, or let's say somewhere, near to some in prime location in Delhi. So, how will I value that particular property? Usually, they are valued at historical cost. Remember, accounting standards are applicable. So, based on the concepts of accounting standard, it will be valued at historical cost, but subject to revaluation. Subject to revaluation once in every 3 years. So I need to revalue once in every 3 years, and whatever revaluation is done, that will be parked in the revaluation reserve. Simple. That's a normal concept that we follow. Okay. I need to check for the impairment as per the accounting standard. Now, so whatever amount, if let's say, for example, on a revalued property, any impairment is coming, then to the extent first I will go the revaluation reserve, and then the subsequent impact will go the P&L. Same like the normal accounting concept that is there. There is nothing change. Next, debt securities. Okay, debt securities considered to be held as to maturity, measured at historical cost. Again, along with the debt securities, it's the equity securities. Equity securities. Now, if these equity securities or derivative instruments are actively traded in the market, okay, then then measure at fair value. Now again, if I'm measuring at the fair value, then I need to check at the every balance sheet date with respect to the impairment of the list values. Okay. Then unrealized gain and loss due to changes in fair value is required to be recorded into fair value change account. Then that account should be as a part of my equity under the head of equity. So those all things will be applicable on that. What if they are unlisted? If they are unlisted or not actively traded, simple, record at historical cost. Simple, there is nothing difficult in this. Okay, few of the things with respect to your recording of some assets, valuation of asset, premium, because this gives a clarity on the applicable reporting framework, accounting framework. Okay. Once we are done with the reporting framework, we saw this one, accounting standards. Okay. Now the next is key risk areas. We also discussed which are the key risk areas, critical areas or key risk areas over here. Okay. So these are the certain key risk areas we discussed. Audit plan with respect to the areas. Okay. That's the very important for today. Audit plan for each of these key risk areas. How will you conduct audit? But before going to that, what I will cover is the next topic, the topic which is audit report. So let's see audit report. How we report in case of insurance company. Okay. So I have a one audit report with me. Okay. Over here, which was for one of the entity, one of the company. I'll request you guys don't look at the name of the company. I'm not promoting any of the company, so please don't. Okay. This is a standard audit report in case of an insurance company. Now, when I talk about audit report, the first question is whether standards on auditing regarding the audit report is applicable. That is from SA 700 to from SA 700 to SA 720 is applicable. And we'll see now. Generally, how it works is first you have an opinion paragraph. Okay, you have audited this insurance company of this particular period, which comprises of balance sheet, revenue account, profit and loss account, receipts and payments account for the year ended, and a summary of significant accounting policies. Okay, so four things we are talking about. Balance sheet. Okay, then profit and loss account, then revenue account, and the fourth one is receipt and payment account. Now you will be thinking, where is the cash flow statement? Where is the statement on changes of equity? Where are those things? So in the case of the insurance company, those are not required to be prepared. But you said just now we saw the cash flow. Yes, we saw the cash flow. This receipts and payment account is nothing but your cash flow statement, prepared on the basis of direct method. So receipts and payment account is nothing but the cash flow statement prepared on the basis of direct method. That's why it has a name of receipts and payment account. Okay. Then, in our opinion, into the best of information explanation, in accordance with the Insurance Act, Insurance Laws amended 2015 by then Insurance Regulatory Development Act, IRDA Act, Insurance Regulatory and Development Authority preparation of financial statement and auditor's report of insurance company regulations, IRDA financial statement regulations. Okay. Then and the Companies Act. So they are mentioning which all laws and regulations are applicable and on the basis of which we have done the audit. In the manner so required gives a true and fair view with accounting standards prescribed under section 133. Accounting standards. As we discussed already that accounting standards are applicable. Okay. Now when I talk about a company, it's a company, insurance company. Okay. So if insurance company, then Companies Act is applicable and accounting standards are applicable by the virtue of section 133. So that is mentioned over here. Okay. So again, balance sheet, revenue accounts, then related to fire revenue, operating profit from marine revenue, miscellaneous revenue accounts, multiple revenue accounts. Then in case of profit and loss account and receipts and payments account. So these are the things they report. Basis of opinion. Basis of opinion is standards on auditing. Based on that, auditor's report. See this one. Emphasis of matter paragraph. Based on my standards on auditing. When we will see the standards on auditing, we will see in detail with respect to the emphasis of matter paragraph. But I'll discuss something over here. A particular term. Claims incurred but not reported, or claims incurred but not enough reported. So we draw attention to note number 36 to the accompanying financial statement, which explains assessment made by the management of its business and financial results, recoverability of the investment receivable from other insurance companies, and settlements of its liability, including valuation of claims incurred but not reported, or claims incurred but not enough reported. Now, what are these things? Claims incurred and not reported, or claims incurred but not enough reported. So basically, these are the claims for which a company has already incurred the claims, but they are yet to be recorded in the books of account because of any reason. So these are the claims which are already incurred, but company is yet to record in the books of account. Okay, so these are the claims recorded, but not enough recording, or you can say both. Both are same. Yeah. So that's the one particular area. Key audit matters. Again, as per the standards, that is, which are the key audit areas for in an audit of a insurance company. That is also discussed over here. We'll see this topic in detail. What are the key audit areas when we'll discuss about these standards. That are key audit areas. Okay. Information other than the financial statement and auditor's report thereon. Again, we'll see on that when we'll discuss the standard. What are the things that we can there in other information or other paragraph, other matter paragraph. Management responsibility. What is the management responsibility? Preparation and presentation of financial statement. That's the management responsibility over here. Okay. What is the auditor's responsibility? To conduct audit, to give a reasonable assurance. Okay. So that's the auditor's responsibility. Now, report on other legal and regulatory matters, requirements. That's the important one. this is the important one because these are the things that we are required to report upon based on the laws and regulations prevailing in the insurance company. Okay. So let us discuss one by one in detail. Okay. So the first one, what it says that as required by the IRDA financial statement regulation, we have issued a separate certificate dated 6th May 2021, certifying the matters specified in paragraph 3 and 4 to Schedule C. Okay. So there is a Schedule C of IRDA, okay, which requires like auditor to report on certain areas. Yeah. This is independent auditor's certificate as referred into paragraph 1 under report on other regulatory and legal requirements forming part of independent auditor's report dated May 6. So that is report on matters mentioned in Schedule C, okay, of regulations. Now, which are these matters? First, this is just the background about that particular thing that is there. That's the management responsibility, independent auditor's report. So this is a certificate. So this certificate, every certificate is required to be prepared as per the standards on auditing. Or there are other standards also applicable, which are related to the some other assurance engagement other than the audit. Okay, so these are those one. Now, opinion. These are the points which are covered under Schedule C. Okay. First, whether they have received all the information and explanation to the best of their knowledge and belief were necessary for the purpose of their audit. Okay, so they need to like inform whether they have received all the information and explanation that was required. So they'll say yes, in accordance with the information and explanation and representation given to us, and best of our knowledge and belief based on the examination and audit and examination of books and other records maintained by the company at the year end. So that's a particular thing. They say that okay, we have received. Okay. Then second is whether proper books of account has been maintained by the insurer. So far appears from an examination of those books. So over here, if you see, that is covered over here. Some of the things which are in common with 143.3. So these are the things which are common between Schedule C and section 143.3. So these things both are common between Schedule C and 143.3, and hence they are only covered in 143.3 rather than doing the duplication. They have covered in the 143.3. So what is that is we have sought and obtained. Sorry. Yeah. We have sought and obtain all the information and explanation which to the best of our knowledge and belief were necessary for the purpose of audit. In our opinion, proper books of accounts are required by law, have been kept by company so far as appears from the examination of those books. Okay. Then whether the balance sheet, revenue account, profit and loss account dealt by with the report and receipts and payments account are in agreement with the books of accounts. Okay. So the balance sheet, revenue accounts, profit and loss accounts and receipt and payments account dealt by with this report are in agreement with the books of account. This is basically related to the 143 pure. Company's financial accounting system is centralized and no returns for the purpose of audit are prepared at the branches. Remember, there is one point in 143.3 which talks about whether adequate returns from the branch has been received or not, and if they have received, then how they have been considered with. So let me show you that we discussed. Sorry. Yeah. I'm not able to find as of now that particular point, but this is coming from 143.3. Okay. Then another area that they are required to provide about is whether the financial statement have been prepared or are in compliance with the accounting standards. Okay, same, that is also required in 143.3. So they say that the aforesaid financial statement comply with the accounting standards specified in 133 of the Act and other accounting principles generally accepted in India, which are not inconsistent with the accounting principle, but as prescribed in the IRDA financial statement regulations. Means for accounting framework, as we discussed, accounting standards plus regulations are required to be referred to. Okay. Then, in our opinion and best of our information and according to the explanation given to us, investment has been valued in accordance with the provision of Insurance Act. So that talks about valuation of provision of the valuation of investment. Okay. So whether valuation of investment is done appropriately or not, investment has been valued in accordance with the provision of the Act. Then accounting policies selected by the company are appropriate and are in compliance with the applicable accounting standard. So that's another area they are required to report upon, whether the accounting policies are in compliance with the accounting standards. Same, these are with respect to 143.1 or 143.3. Then on the basis of written representations from directors, none of the directors is disqualified under under the relevant section of the Act, Companies Act. Remember, there is a section, there is a reporting requirement on the director disqualification. Are you guys remembering for 143.3 that we discussed during the Companies Act on what matters they are required to report? So these are the areas where, like as per 143.3 plus some of the common areas where the auditor is required to report. Okay. See, I'll show you one of the audit report that we remember discussed during our company's audit chapter. Matters to be referred under section 143.3. This is normal company's audit report. There is nothing insurance or bank company here. This is the normal company and its audit report. We have sought all the information in an explanation. In our opinion, proper books of accounts are required by law, has been developed by company. Standalone financial statement. Standalone financial statement dealt with by report are in agreement with books of account. Standalone financial statement comply with Ind AS. None of the director is disqualified. Remember something that we already discussed. These are the points of section 143.3 that every auditor of a company is required to report. The same we discussed over here, but bit of tweaking with respect to the insurance. Okay. Now, another area that where auditor is required to report with respect to the operating effectiveness of internal controls. Internal financial controls over financial reporting, that is in Annexure A, we'll see in a while. Okay, that is IACFR. Now, these are the other matters which are required to be included in the auditor's report in accordance with the requirements of the some other act. Okay. See, with respect to other matters to be included in the auditor's report in accordance with section 197(16) of the act as amended, in our opinion, in the best and according to the explanation given to us, remuneration paid by the company to its director during the year is in accordance with the provision of section 197 read with 34 of the Insurance Act. This is regarding remuneration of the directors. That's an additional reporting requirement. Okay, that's an additional reporting requirement based on section 197 read with section 34A of Insurance Act. Directors remuneration. Okay. So another area where companies auditors are required to report is as per Rule 11. Remember, with 143.3, there are certain matters that are required to be reported as per Rule 11. See, we discussed Rule 11 in previous lectures. Like there are certain areas which are required to be reported, 11A, B, C, and there was an amendment also with respect to 11E. So same way, this Rule 11 will be applicable over here also. So Rule 11 of the Companies Act, Audit and Auditors Rule, that requires us as the company, as detailed in Schedule 16, Note 3, has disclosed the impact of pending litigations, the first area. Second, actual valuations of liabilities in respect of claims incurred but not reported, claims incurred but not enough reported, premium deficiency reserve is the responsibility of the appointed actuarial, and the same has been duly certified by appointed actuary. Okay. So regarding the valuation, actual valuation. Third, no amounts were required to be transferred from Investor Education Protection Fund by the company. So amount which were transferred from Investor Protection Fund. So that is one of the area that is required by Rule 11. Rest of the areas will not be applicable over here, hence they are not reported over here. Now coming back to the Schedule C. So these are the specific Schedule C points for the reporting, which says that we have reviewed management report attached to the financial statement for the year ended this, and basis our review, we have not found any apparent mistake or material inconsistency in management report. So reporting on with respect to management report, same on the line of director's report. Okay. Whether any material inconsistency is there or not. Then, based on the management representation and compliance certificate, board of directors by the officers of company charged with compliance and same being noted by the board of directors, we certify that the company has complied with the terms and conditions of registration stipulated by IRDA. Company has complied with the terms and conditions of registration. Remember, we were discussing about, okay, certificate of registration is mandatory and that is continuously required. This is the reason we were discussing. Minimum solvency ratio, minimum capital. This is the reason because they are directly related to the registration of the company. Then, whether they have verified the cash balances by actual inspection, okay, or on the basis of certificate or confirmations received from branches. So they will say that, okay, we have verified the cash balances. So this is regarding verification of cash balances. Then another area that is they are required to report is whether, just a minute. Yeah, to the extent, if any, okay, which they have verified investment in transaction relating to any trust undertaken by the insurance as a trustee. So if insurer is a trustee, if the company is a trustee, then any transaction undertaken by the company with respect to the trust, okay. But here they are saying that company is not a trustee in any of the trusts, so that will not be applicable. So it was transaction by insurer as an trustee with trust. Whether any part of the asset of the policyholders fund has been directly or indirectly applied in the contravention to the provision of the Act relating to the application and investment of policy funds. So they will say no part based on the details. So that's the one area that the auditors is required to report upon. Okay. So fund of policyholders, that's the asset of policyholders fund, whether it has been applied according to the provisions or not. So these are the areas where auditor is required to report, and this is how the auditor is required to report. If I have to summarize reporting requirement, so reporting requirement will include report as per standards on auditing plus 143(3) plus Rule 11. These both are of Companies Act. Then reporting with respect to 197. So reporting under section 197 of Insurance Act plus Schedule C reporting. Okay, so these all areas that I am required to report upon as per SA, as per 143(3), as per Rule 11, as per 197 of the Insurance Act, and as per Schedule C of the regulations. Okay, that's the reporting regarding my insurance company. That was a brief of audit report. Now there are other areas that along with, this is the content of auditor's report. That's it. I'm talking about this is the content of auditor's report. But that doesn't, it is not only limited to this. Post that there is a report on the internal financial controls also. Again, as per the Companies Act. So that is again one of the reporting that is required. Plus IFC FR reporting. Now you will be wondering whether CARO is applicable to this company or not. So remember guys, CARO is not applicable here. CARO is not applicable. So I'll go back to the notes. I'll briefly write down what are areas of reporting is applicable. Auditors report content. What are the areas are there? 1. As per standards on auditing from 700 to 720. All the areas are required to be reported, which includes my opinion, basis of opinion, then key audit matters, EOM paragraph if applicable, then you can say other matter paragraph, now opinion or basis of opinion, it can be a qualified opinion or basis of qualified opinion or modified opinion, whatever it is, so that will be changed accordingly. Management's responsibility, auditor's responsibility, that is as per SA that is required to be reported. Then comes as per section 143(3) of Companies Act, areas that are required to be reported. Then it comes reporting as per Rule 11, okay, of companies auditors and audit and auditors rule. Then section 197 of Insurance Act, that talks about directors' remuneration. Then you are required to report upon matters prescribed under Schedule C of the regulations. Okay, and then report on IFC IFR. So these are the basic reporting requirements of content or format of audit report. This will contain all these things. Any doubt till now? Any doubt? Any doubt, guys? No? Okay. Let me see if I have available Schedule C with me so that we can discuss that. Let me see if I have the Schedule C with me. Yeah, here they are. So these are the regulations. Just let me open these regulations. Sorry. Just a minute. Here it is. These are the regulations which were issued by IRDA. Okay. Here, Part A, Schedule A of Part 1. Part 1 of Schedule A prescribes some accounting principles for the preparation and presentation of financial statement, which includes, application of the accounting standards. Then it includes premium, acquisition cost related things, claims, actuarial valuation, procedure to be determined for valuation of investment that we discussed. Okay, loans, linked businesses, funds for appropriation, future appropriation. That is second. Part 2 of Schedule A, disclosure forming part of financial statement. Okay. The regulations are a bit blur because of the original, their content sort of thing. That's the copy available on the portal. So unfortunately, this is the copy available. No issues, but I think it's pretty much visible and we can read it out. Okay. Then these are the additional reporting requirements in the financial statement. I'm not talking about the auditor's consent. This is a financial statement that we'll see in a while. So that's the part 2 of Schedule A. Then again, part 3, that's a general financial statement, general instruction for preparation of the financial statement. Part 3 of Schedule A. Then part 4, contents of management report of Schedule A. Okay. Then part 5, with respect to the preparation of financial statements. This is forms, which are Form ARA, applicable for the company. So Form A, applicable where life insurance is there. Form B, where general insurance is there. For the company dealing in general insurance, Form B will be applicable. For the company dealing in life insurance, Form A will be applicable. Okay. So ARA means Form ARA that we have seen in the IPCC schedule numbers with schedule numbers. So that's the Form ARA, or this is coming from this particular regulation. Form APL, which is P&L. Balance sheet, Form A balance sheet. Then remember schedule we used to see in IPCC, Schedule 1, Schedule 2, Schedule 3. So these are the schedules which are prescribed reporting format in the regulation. I'll not take much of the time on the schedules because we have already seen in the earlier also. Okay. That is now Schedule B. We were talking about till now Schedule A, which were having Form A, management contents report, some additional requirements on the financial statement for the reporting purpose. Now this is Schedule B. Now Schedule B part 1, accounting principles for preparation of financial statement. Now, what is the difference between Schedule A and Schedule B? I'll tell you as per the regulation itself. So, Schedule A, as I said, it will be applicable where there is, you can say, a person is, carrying on business with respect to the life insurance. That's where Schedule A is applicable. Now in insurance, if he is carrying on the business of general insurance, then schedule B will be applicable. So if I go back on the top, see, an insurance carrying on life insurance business, requirements of schedule A will be applicable. Insurer carrying on business like general insurance business, requirements of schedule B will be applicable. Okay. Now, when I talk about schedule A or schedule B, there is small changes, not that much big change. Like, the changes we have difference between AS and NDS, not those many big changes, but small changes. Okay. So again, schedule B, part 1, which deals with my accounting principles. So we have already discussed accounting standard AS3, AS17 related, AS13 will not be applicable. Reason because for investment, there is a separate guidelines given that we have seen. Remember, procedure to determine value for investment, which includes real estate property, then my debt securities, equities that are actively traded that we discussed, then unlisted or other than actively traded equity securities. We already discussed these areas, loans. So there are some specific requirements which are already given in the regulations. So that's why a respective accounting standard is not applicable. That is my AS13 is not applicable over here. That is fine. We have already discussed over here this. Part 2. Again, part 2 of schedule A and schedule B, both are same. There is no major difference between both. That is additional disclosures, you can say. In financial statement that we'll see in a while. Part 3 is a general instruction for preparation of financial statement. Part 4 is the content of management report. Same that we saw in schedule A. We'll see in a while in detail. Part 5, preparation of financial statement. Now, as I said, remember AS17 is applicable irrespective of the listing requirement or anything for an insurance company. Reason because AS17, a general insurance company, okay, a general insurance company is required to bifurcate its reporting requirement with respect to motor, workman compensation, product liability, engineering, aviation, personal accident, health insurance, and other insurance. So they need to bifurcate between both. And schedules are required to be prepared. Revenue accounts are required to be prepared for fire, marine, and miscellaneous insurance business. Separate schedules are required to be prepared for marine cargo, marine other than marine cargo. So these are some additional reporting requirements or preparation of financial statement requirements for an insurance company. Okay. Again, my form, see here, it's a BRA. That is, be applicable for other insurance and revenue account form B-RA. Form B-PL, B-BS, balance sheet. Then the schedules that we have already seen during our intermediate or IPCC. Then schedule C, auditor's report. Now every auditor's report should contain, or auditors should report on these matters. Like, what are these matters? That they have obtained all the information and explanation to the best of their knowledge and belief were necessary for the purpose of their audit, and whether they have found it satisfactory. Same as 143.3, and that's why this is only reported once, not duplicated. Whether proper books of account has been maintained, same as 143.3. Whether proper returns and audited or unaudited from branch and other offices have been received, again same as 143.3. Whether books of accounts are in agreement with the whether financial statement are in agreement with the books of account, again same. So the things which are same between or common between 143.3 reporting under 143.3 of Companies Act and Schedule C, we report only once. Now this is something different which is only applicable here also, whether the actuarial valuation of the liabilities is duly certified, appointed by the actuarial. This whether then the other requirement is auditor shall express the opinion on whether the balance sheet gives a true and fair view, same as per my section 143. 143.3 also requires you to report on this. This is same. This is same. This is something new. Whether the financial statement are in accordance with the provisions of the IRDA Act or Insurance Act or the Companies Act. Then investment has been valued in accordance with the provision of the Act. That is something different, and we have seen that. Then accounting policies selected by the insurance are appropriate and in compliance with the accounting standards with applicable accounting principles. That is same. Then other auditor, again auditor is required to report whether they have reviewed management report and there is no apparent mistake or material inconsistencies for management report. So this is with respect to the management report of Schedule C. And another reporting requirement is whether insurer has complied with the terms and conditions of the registration stipulated by the authority. So terms and conditions of registration, again as per Schedule C. This is specific ones. Then a special certificate, a certificate signed by the auditor, other than this, that they have verified cash balances that we've seen and no part of the policyholders fund have been directly or indirectly applied in contravention. So these two things are required to be given in the form of certificate by the auditor. Clear? That's the reporting requirement and the regulations. Any doubt till now? Any doubt? We have seen the reporting regulations. Thank you, Vidula. Thank you. This is how a reporting requirement for the insurance company flows. See, in Companies Act, we are well aware that, okay, this section is applicable. This is the format. We are required to report from here. We are required to report here. We are required to report this. Same, this is for the insurance company. This regulation, you can consider the first requirement for the reporting. Okay. These regulations like Part A, Part B, Part C are on the same line like we have a Division 1, Division 2, Division 3 in the Companies Act, plus Section 143.3, CARO reporting. On the same line, we have over here Part A, Part B on equal to the division of the Companies Act. So, for normal company, financial statement flow from Schedule 3, that is Division 1 or Division 2. Okay. For insurance company, they flow from the regulation, financial statement requirement flow from the regulations that we are seeing, and in that also schedule A, life insurance, schedule B, my general insurance. Okay. Now when I talk about auditing requirement for normal company and for insurance company, just a minute. Audit report flows from section 143. Now there are various requirements, 143.1, 143.3 and other also. So section 143 primarily governs my reporting requirement, plus sorry, rule 11 plus CARO if applicable. For insurance company, the relevant is schedule C of regulations plus section 143.3 plus rest of the areas of rule 11. No CARO is applicable. Yeah, ICFR is applicable over here also. It is here applicable here also. This is how it works. Any doubts? Okay. What we'll do, guys, we'll take a quick break of 10 minutes. Then I'll start in a way that we'll cover some questions, practical questions that are asked in the past exam with related to the insurance companies, audit of insurance companies, and simultaneously we will correlate the question with the financial statement also. Okay. So get ready for the detailed practical session, and I want your full participation. Okay. For the questions that we'll discuss after break. Okay, guys. Let's take a quick 10-minute break and then we'll join again. Hello everyone, welcome back to the session. Now let's start the practical round. What I mean by that? Let's solve some practical questions, okay, with respect to the insurance or insurance audit of insurance companies, and then we'll relate those questions with the financial statement and the area which is pending for discussion is audit plan and execution of audit plan. Okay. So questions will be related with these two areas, execution of audit plan, and we'll correlate with the financial statement also. Okay. I have some questions written over here also, and I'll also, adding up some more questions when we will be discussing. Okay. First, this was asked in May 2018. What is the question here is? You are the auditor of Good Luck General Insurance Company. You want to ensure that there exists good system that effectively serves the requirement of true and fair accounting of claim related expenses and liabilities. Suggest how this can be ensured. Now it is talking about claim related expenses. Okay. So first of all, what you need to understand is like what is required to be reported with respect to the claims related, like what are the expense related to the claims, what are the expense related to the liabilities. So you need to understand first that area, and on the basis of that only you can identify, okay, this is how you need to audit that particular area. Okay, so let's first understand claim related expenses and liabilities. Okay. So when I say claim related expenses or liabilities, that is something, related with the provision, claims provision. Okay. Now, what are claims in a general environment for an insurance company? Claims are where a policyholder asks the insurance company to pay the benefit to him. Like for example, I am an insurance company. The policyholder will come to me and will ask me, okay, pay the benefit to me. Reason because like I have taken the policy for the risk. Now the risk has been materialized. Now you need to pay to me. So that is claim. Okay. And the provision related to the claims, like what you can say is like when a person claims an amount. So there are certain requirements that are required to be, fulfilled by that particular company. Okay. So that is, we'll see. Let me write it down over here. Okay. Specific auditing procedures. The first one we are discussing is a claim related. Now, when I say claim, the first things come into your mind. What is the type of claim that we are talking here? Which policy? Life insurance, health, medical, accidental. Okay. Which type of third party? Which type of policy it is? So first you need to understand the policy and type of claim. Okay. Once you understand the policy and the types of claim, then what you are required to see is, okay, then you should see what is a standard policy document or template. Okay. To lodge a claim means how a claim is lodged or you can say filed, lodged before a company. I'm talking about the procedure. Okay, plus documents required. Once you have the understanding of these procedures and documents, what you can do is you can verify whether these procedures and documents have been complied with. Means with the documentary point of view, the claim is appropriate. I can say that. Okay. Then another area that you need to see is, okay, list of claims that have been recorded by the company. So once the claim is lodged, then whether that claim is entered into register of claims. Let's say, for example, today, if someone is, claiming a particular area, claiming a particular benefit under the insurance, then how will I ensure, okay, I have received a document. What I will do, I'm an insurance company. I just not receive documents and just keep it. Okay, give me the documents, I'll keep it. No, there is something I need to do. I need to enter into a register of claims. Like this is a register where all the claims are noted down and then they are processed. So once I'll have appropriate documentation, I'll enter into my register of claims. Okay. Then either the claim will be accepted or the claim will be rejected from here. When I say claim accepted, means the company agrees to the claim and company will pay out the benefit to the policy holder. So how you need to ensure how the benefit is calculated. Okay, then you need to look into, okay, who is the beneficiary to whom the amount is paid and whether it is paid to the beneficiary or not, or paid to correct person. Okay. Then whether it has been recorded appropriately in accounts, in books of accounts. If it is rejected, then appropriate reasons have been documented. Okay. Then it is required to be ensured other than this. Okay. Now there are claims which can be, neither accepted nor rejected, that are under process. Under processing, which are neither accepted, neither rejected. So for such claims, you need to verify whether these claims, appropriate provision for these claims. Now, why appropriate provision? Reason because these are the claims initiated, intimated, but they are not yet paid. Okay. So they can be like, there can be a chance that a company might incur some liabilities over here. So a provision is required for claims filed with company but not yet acknowledged, means are they rejected or accepted by the company. So a provision is required for these particular type of claims, either a provision or reporting in contingent liability. Because company will verify whether I am required to pay this claim or not. So till now, it can be a contingent liability. Based on one of the things should be there. Okay. And another area that is required to be seen is that appropriate settlement cost is booked. So whatever settlement cost for claim is there, okay, settlement cost of claim is booked. So that is something with respect to, some areas with respect to claims. Also, other than this, sorry, there are few more things that are required to be seen while, auditing for claims. That is, remember we talked about area which was claims incurred but not reported. Or claims incurred but not enough reported. Okay, so these are the areas where you need to see, okay, whether appropriate disclosure, I'm talking about now, disclosure is done. So appropriate disclosure is required for these particular areas. Okay, then there is a specific, now when I remember I mentioned over here contingent liability, a specific disclosure is required for contingent liability. Now, while auditing the claims, you need to make sure that the specific disclosure of contingent liability is there in financial statement. Now, what this disclosure look like is, what you are required to provide in this disclosure is, I'll show you with the live example. Over here. This is the reporting of contingent liability in financial statement. And this reporting requirement is as per schedule that we discussed now. Remember, I'll show you in schedule also. In schedule also, there is a specific reporting requirement with respect to sorry. See, part 2, whether it is the schedule A or schedule B, the part 2 is same itself. What it talks about for contingent liabilities, okay, for contingent liabilities, you need to provide partly paid up investment, underwriting commitments and outstanding, claims other than those under policies not acknowledged as debt, guarantees given on behalf of company, statutory demand liabilities in dispute, reinsurance obligation to the extent not provided, and others. Okay. For that, you need to provide all these details with respect to the contingent liabilities. And if you see the financial statement over here, partly paid up investments with the corresponding numbers, claims acknowledged other than against policies or as debt by the company, underwriting commitments outstanding, guarantees given, statutory demands and liabilities, reinsurance obligation, insurance claims disputed by the company to the extent not provided or reserved. So these are the contingent liability disclosure. So we were talking about this point, claims other than against policies not acknowledged as debt by the company and insurance claims under dispute. So these are the claims that we were discussing, that either they should be provided in the provision. If they are not provided, they are disclosed over here. But this is whole contingent liability disclosure as per part 2 of either Schedule A or B, as the case may be, life insurance or general insurance. Clear? So contingent liability disclosure in financial statement as per part 2 of regulations of Schedule A or B, whatever is applicable. So this is how the contingent liability is provided, is reported. Other than this, there are some more areas with respect to the claims. Okay. Now, when I say like claims, there are various registers which are maintained in respect of claims. Not only one register that I was talking about, register of claims, but there are various registers. So I'll just write it down, the names of the register. So when I say register of claims, that include my claim intimation register, then claim paid register, then claim disbursement book, then there are other documents related to claims and all those that are filing. So documentation which is there for the claim, like survey report will be there, you know, a guy who performs a survey and says, okay, this much amount of damage is there. So that's a particular area for claim. So this is with respect to the claims, okay, and the provision for claims that we discussed. So that was, you know, there a question in May 2018, which was of 4 marks. Sorry. This was of 4 marks. Now, with respect to the claims, how they are disclosed in financial statement, let's see. We saw the contingent liability, but there are, other than the contingent liability, there is a specific schedule also for claims. Let's see that particular schedule. See, in current liabilities, Schedule 13, you will identify how claims are reported. So it will be claims outstanding, which will be reported as a line item. Okay, which are the claims outstanding for the company. Okay, then there will be relevant items in the profit and loss account or the receipts or payment account, which will talk about, okay, how much of the claim is paid. I'll show you that also. Commissions and over here. Yeah. This is a general insurance. So you won't be seeing the claims of life insurance, but this is a general one. Okay. See, claims incurred schedule 2 net. It will be claims paid directly on fire. Remember, I talked about that in marine, we have to bifurcate marine cargo and marine others. That's the bifurcation for marine that is required to be given. Plus segment reporting for others also. Motor OD, motor TP, motor total, workman compensation, personal accident, health insurance, liability, engineering. Then we have trade credit, aviation and other miscellaneous, total, miscellaneous and grand total. These are as per AS17 segment that they are required to report each and every bifurcation. And with respect to the claims, add reinsurance, less reinsurance ceded, net claims paid, add claims outstanding at the end of the year, less claims outstanding at the beginning of the year, total claims incurred. So this is how claims are reported in financial statement. Now, if I'm reporting these amounts, I am required to audit these amounts also at the end of the year, beginning of the year, that claims paid directly, reinsurance. So all these areas I'm required to be reported, plus this bifurcation that is required to be reported in there, that I'm required to audit this also. Clear? Any doubts? See, acquisition cost means acquisition cost with respect to the acquisition of contracts, not the mergers and acquisition, but contracts. Let's say, for example, if I'm, if I'm incurring or entering into a insurance contract with anyone else, with a customer, let's say I'm getting a customer. So there is a cost behind getting that customer. That's an acquisition cost of a customer. I hope I'm clear. Another question is whether Schedule C is an additional reporting requirement. Answer is yes. Another question which is coming here is that Section 197, what is Section 197 of Insurance Act? Section 197 talks about reporting with respect to the director's remuneration. Okay, then another question is difference between endowment, money back and annuities. Endowment is generally, at the policy end of policy term, one shot payment is done. Whereas the money back, you get a specific payment after a specific period. Let's say after every 3 years, every 5 years, like that way. Annuities is a combination between money back and endowment. But majorly, I'm not a insurance guy, so different policies are there in the market. You need to research on that further. Right now, we discussed the application of AS17 that is there. Settlement cost of claims. At times, there are dispute. So settlement cost will include, okay, if there is a dispute, I will hire legal professionals. Or you can say, for example, if there is a person who is claiming, then I need to get his survey. For example, motor accident insurance. If there is an accident, then I need to send a surveyor to check, okay, how much damage it is and how much claim amount is required to be paid. So there is a cost involved behind settlement of claims. That's the cost of settlement cost of claims. Any further doubt, guys? Any further doubt? Okay. Next question. Mr. Bhavya is appointed as an auditor of General Insurance Company Limited. State the verification procedure to be followed by Mr. Bhavya in case of outstanding premium and agents balances. That was asked for May 2018. It was a RPT one. Okay. Now what it says that that for outstanding premium and for that what you say agent balances, what is required to be done? Okay, it's pretty simple, nothing else. When I say outstanding balances, you need to see, okay, what is the outstanding premium that is required to be received from a particular agent. Okay, you need to examine the balances, you need to examine like what is the outstanding balance with respect to that agent. So if I have to write down, just a minute. Over here, okay. What are the areas that will be given for the outstanding balances? I'll write it down here. Okay. So what we are required to do, first of all, when I say outstanding, you need to see, okay, what is the balance. So you need to extract the balances which are outstanding, the list of balances that we are talking about, okay, and understand why the amount is outstanding still, okay. Then you need to understand the aging of these outstanding amounts, aging of balances, okay. And you need to understand why, if there is something, more than 1 year, more than 3 years, what is the reason behind so much of aging, okay. Then you need to understand sector wise bifurcation of outstanding premiums, the sector wise bifurcation that is there for the outstanding premiums, okay, like from which sector, let's say fire, marine, what is the sector wise bifurcation of premiums which are outstanding. Then you need to check whether the outstanding premiums have been, like, if I say outstanding premium, since the date of, like, let's say for example they are outstanding on 31st March 2021. So from that date to the date of audit report, whether anything has been collected. So you need to see subsequent collection has been done or not. Okay. If subsequent collection is not done, then you need to see whether appropriate or any bank guarantee or any guarantee is there. Or any other, you can say deposit or sort of money specifically held for such scenarios is present or is available or not. Okay, so these are the areas that you are required to verify for outstanding premium or agents balances. Clear? Any doubt? Any doubt, guys? Also, you need to see if there is any policy, like with respect to this outstanding premiums, that what is the policy, company policy that they are following. So policy is also required to be looked into in the current case. Any doubt, guys? Any doubt? See, these areas are important to understand. Reason because that's how, if you understand the area, then only you will be able to perform the audit of that particular area. That okay, what is required to be seen in this particular area, as in from what is the risk and what is a particular thing that you are required to view. Any doubt, guys? Okay. If no further doubts, then let me move forward to the next area. Okay. Now, the next question is, High Life Insurance is into insurance business and an established presence in the field since last 25 years. Your firm, SRN Company, are appointed auditor of, are appointed auditor of a High Life Insurance Company. While conducting its audit, you come across several important actuarial processes being followed in accordance with the general regulatory guidelines. You understand and realize that the actuarial department is calculating and modeling the hub of company. In the above context, explain the roles of auditor with respect to actuarial. Okay, so here you need to understand what is the role of auditor with respect to the actuarial. Means wherever actuarial valuation is present, what we are doing, what auditor has to do with that particular area. Okay, now first of all, you need to understand what is basically requirement of this particular area. What is done in actuarial? What are the things that are covered based on this? Then only you will be able to understand, okay, what is required and what is, what are the areas which are required. Okay. As per the, there are certain liabilities, let's say, for example, in reporting also, we are required to report, we saw in Schedule C, that whether the actuarial valuation of the liability is duly certified by the appointed actuaries or not. So first of all, over there also, I'll show you that we discussed that particular area. See over here, the actuarial valuations of the liabilities in respect of the claim incurred but not claimed, or this or is responsibility of the appointed actuary, and hence and the same has been duly certified by the appointed actuary. Okay, referred into the key on audit matters paragraph, upon which we have placed reliance. Apart from this, the company did not have any long-term contracts, including derivatives contracts, for which there were any material foreseeable loss, which is also part of actuaries. Okay, so first of all, there is a reporting requirement for actuaries. Understood? So here also we are required to report, okay, how the actuarial valuation for the liability of the life insurance or for the claims that are incurred but not reported is there. So we need to verify whether the reporting, this particular valuation has been done by the actuarial or not. Okay. Second, there is additional reporting requirement with respect to actuarial assumptions for valuation of liabilities. That is a part of your financial statement. Now, as a role of an auditor, what we are required to do? other than the reporting, what we are required to do is, I'll write it down in the notes. As a role of auditor, what we are required to do is, first of all, we need to see whether the liabilities / claims not acknowledged are valued as per valuation by an actuary. Okay, so there is a valuation done by actuary, so whether that has been done or not. Okay, including when a valuation done by actuary, it's the same like, you know, expert, management's expert. So when I talk about management excel, so that expert will be taking some assumptions while performing or estimates while performing the valuation. So I need to verify that assumptions and estimates to the extent possible. Okay, then he will be selecting some method for valuation. What you need to do is, as an auditor, verify the method is in compliance with regulations. Okay, is in compliance with regulations. Now they may develop a model. Okay, so there is a model development, business plus. So there is a lot of things that have been done in the background for the actuary valuations. So you need to verify, okay, whether this particular thing has been, you know, the models which have been developed are in compliance with or not. So you need to see these particular areas. Okay, so that is the role of auditor with respect to the actuarial valuation process. Plus, I'll also show you in the financial statement. Additional reportings with respect to the valuation, actuaries valuation. So that's a part of the policy that is being reported. Over here, valuation that is for the bonds and equities, that is as per the policy. Tier 1 bonds, tier 2 bonds, that is as per the policy. Then claims incurred but not reported, claims incurred but not enough reported. The estimated liability, just a minute, sorry. Apologies for this. Go ahead. The estimated liability for claims incurred but not reported and claims incurred but not enough reported has been estimated by appointed actuary in compliance with the guidelines issued by IRDAI White Circular this dated this June. Okay, and applicable provisions of actuarial practice standard number 21 and 33 issued by the Institute of Actuaries Standard of Actuaries Institute of Actuaries of India has been complied. The appointed actuary has used generally accepted actuarial methods and for each product category as considered appropriate depending upon the availability of the past data as well as appropriateness of the different method to different line of business. This is how it is reported for this claims where the actuarial valuation is done. So there is a compliance with the provisions of circular, that is this circular. Then there is a compliance with the actuarial valuation standard issued. Okay, so auditor is required to verify whether this compliance is done or not appropriately. So these are the areas where like actuarial valuation is reported in the financial statement, and accordingly we are required to verify this particular as a point of from the point of the auditor. Agent's balance. See, Jay, agent balance, when I say what is the role of agent in insurance business, is that agent are the person to whom we pay the commission, okay, and they in turn collect the premium for us and pay to us. So when I say outstanding balance of agent, it is either the commission is required to pay or outstanding premium that he has to deposit with us. Okay, so that's the agent balance we are talking about. Any bank guarantee. So for example, when a person is collecting insurance premium on our behalf, so initially so that to safeguard the interest of some of the customers and safeguard the interest of the the company also, we like as an insurance business, they take some guarantee from the agent. Tomorrow, let's say for example, agent collects the money from the, let's say, customer, okay, or the policy holder on the premium that he collects the premium, but he do not deposit the premium in the with the company, then it will be lost for the that particular policy holder. So that's why at times insurance company takes bank guarantee that okay, if agent is not depositing the premium, the bank guarantee will be utilized, or the deposit money which is already taken in advance from that agent. So that's a bank guarantee or deposit held money for the agent balances. Now, not enough reported, yes, is equal to contingent liabilities, which are we saw the schedule for the contingent liability. Regulations prescribed for the actuarial method. These are the regulations that we just now discussed. This is the circular for actuarial valuation. Plus actuarial practice standard number 21 and 33 issued by the Institute of Actuaries of India. That is the method that is required to be followed. Although we are not subject matter expert in this, but this compliance with this circular plus appropriate standard has been complied with. Whether the assumptions and estimates have been taken are appropriate or not, that are the things or areas that we are required to verify. I hope I'm clear. Any further doubt, guys? Any further doubt with respect to this area? Any further doubt, guys? Okay. If no further doubts, let me cover the next area. Okay. So the next important area is premium related. Okay. Premium related. Now, another important area from the point of view of accounting, auditing is premiums that are collected. Premiums collected, accounting for those premiums. Okay. So this is a very important area because this is a major revenue source for any insurance business. Now, two things. We saw premiums are required to be reported when they are due. Okay. And there is a section 64 VA we also discussed somewhere above. Remember? Over here, VB, sorry. If premium is not received, then insurer shall not assume the risk. Okay. These are the things that you need to keep in mind while doing the audit of a premium area, premium collected. Okay. So, what you are required to do is when you are auditing the area with respect to premium collected or accounting for the premiums, you need to ensure number one, with the point of view of collection, I'm talking about first, whether a separate bank account was maintained, okay, for collection of premium. So separate bank account has been maintained or not, from which no withdrawals are permitted generally. So withdrawal is not permitted from these accounts. These are specifically for the collection of premium. Number two, a reconciliation of premium deposited / collected versus premium received in books of account. So there is a reconciliation, like how much of the amount I am recording in the books as a premium collected and how much is there in my bank account. A reconciliation between both. This should be a daily reconciliation. Okay. Then all premiums collected are identified to policyholders means, let's say for example, if I am the person who is depositing the premium, let's say I am the policyholder, I am depositing the premium in the company's bank account, I am paying the premium. Now tomorrow if company said okay, I have received the premium but I don't know from whom I have received, so to which policy I will apply that premium? That will be something suspense premium received. So there should not be any suspense, in the premiums collected. A specific identification should be available. Okay, this is the premium I received and again this particular policy. That should not happen. Okay, we have received this much of premium but we don't know from where we have received. That should not happen. Second, now this was with respect to the collection. Second area is calculation. Okay. Check the methodology for premium calculation. So premiums are decided on the basis of a method. Let's say for example, when in a life insurance, if a person is aged more, then his premium increases. Over the time, premium increases compared to the premium of a person who is having, still less age. So there is a premium calculation methodology. Check the methodology for premium calculation, whether they have been appropriately followed. Okay, then verify whether the system appropriately measures the relevant criteria for premium calculation. See, for example, today premium calculation is done through systems, softwares. Now that software is appropriately capturing those criteria. Let's say, for example, if the premium is calculated, let's say, for example, if an insurance policy of, let's say, insurance policy of rupees 1 lakh, it might have premium and the policy period 30 years. Okay, so it might have a premium of rupees, let's say 1,000, whereas the policy is of rupees 10 lakh. Period of, let's say, 10 years. So the premium will be higher. Let's say, for example, it may range to 30,000. Hypothetical example. Okay, and in this case also, if I just alter a number of years, let's say instead of 1 lakh, I do 10 years, then the premium might increase for 10 years. On the basis of it, there are certain parameters: policy period, sum assured, okay, how many people are under coverage. So all these parameters are appropriately captured by the system or not. That is the second thing you are required to verify as an auditor. Then very important is recognition of income. When you can recognize the premium collected as an income. So premium is recognized income when policy is issued. Okay, when policy is issued. Now, there can be various components of the policy. So, if there are various components of the policy, then whether the premium is allocated to each component appropriately, whether the premium is allocated to each component appropriately based on policy, that you are required to verify. Then reporting in financial statement. So you need to verify whether appropriate disclosures are made in financial statement. Okay, whether appropriate disclosures are made in financial statement or not. So these are certain areas where we can verify with respect to the claims premiums collected in accounting as an auditor. Any doubt, guys? Any doubt with respect to the premiums collected in accounting? Any doubt, guys? So, okay. Let me take one more question. This was also on the premium. There was a question which were asked in basically again that was asked in, I think it was May. Just a minute, let me check. Yeah, it was asked in November. Sorry, November 18 on the claims. Oh, sorry, premium. So the question which was asked in November was, auditors should evaluate. Sorry. Auditors should evaluate various sub-processes employed by the insurance companies in accounting of premium, like collection of premium from the policyholder, booking of premium, banking, accounting, reconciliation of the same. In the view of above, you are required to briefly discuss some illustrative points auditors are required to follow during audit of accounting premiums in case of life insurance company. The areas just now we discussed is the same question that was asked in November 18. Okay. This is November 18 RTP. Now, another question which was asked with respect to the commission paid to the agents, that was one of the area that was asked. Then then it was there was one question with respect to the this is that you have been appointed as an auditor of ABC and insurance company and found that PQR Limited got their plant and machinery insured on 1/10/2018, but the amount of premium has been paid by them on 15/10/2018. In meanwhile, on 10/10/2018, the fire broke out in the factory and the company filed a claim for damages with the insurance company. Advise the company in this regard. This is with respect to section 64 BB, that no risk is acknowledged till the premium is paid. Here, the premium was paid on 15/10 and fire broke out on 10/10. So before premium, if something happens, the insurance company is not, eligible to pay any of the claims. So the claim will get rejected. So this is a section 64 BB question that was asked in May 2019. Again, one question was asked in May 2020 with respect to, again, claims provision that we have already seen with respect to the claims. That was asked in previous exam or previous RPT in May 2020. Okay. There are other areas also which are important with respect to auditing point of view that we will discuss now. Some of the terms or specific areas. Okay. When I say specific areas, these are based on you can say like specific conditions or just a minute. Yeah, specific conditions like FLC. So these are the specific areas which are applicable or we are required to conduct audit for. Okay, let me write it down one by one each these areas and we will discuss in detail. Like reinsurance, so specific areas we will talk about now. So first we'll talk about reinsurance. What is reinsurance? Reinsurance is, let's say for example, I am a company, insurance company, I have certain risk on me, already I have taken a policy. So I will enter into an agreement with another insurance company to transfer some of my risk to that particular insurance company. So you can say transfer of risk to another company. That's a reinsurance. Whatever insurance I have provided, I'll take a reinsurance from another company. That's a reinsurance basically. Insurance of insurance. Okay. Now, what is the role of auditor for respect to the reinsurance? So being an auditor, what you are required to do, first of all, reinsurance premium paid is in line with the agreement or not. So today, whatever I am paying as a reinsurance premium as a company, I need to verify, okay, that as an auditor, I need to verify that insurance claim that I am paying is in line with the insurance agreement or not, reinsurance agreement. Okay. Second, the reinsurance agreement is in compliance with applicable regulations or not. So there are reinsurance regulations also. So that is in compliance with applicable regulations or not. Third, we need to verify the expiry of reinsurance agreements when the reinsurance agreements are expired. So reason because after the expiry of reinsurance agreement, what we are required to do is the risk that we were, for example, till now we were, not recognizing on the basis of the reinsurance, that risk might need to be recognized. That might have an impact. Once your reinsurance agreement is expired, your accounting will change. You might need to record some additional provisions which were not recorded earlier on the account of reinsurance. Okay, then you need to verify whether amount has been paid for reinsurance. Reason because we already saw till the time you do not pay a premium for the insurance, the risk is not accepted. Same with the reinsurance. Till the time you do not pay the reinsurance premium, although you have an agreement, the risk will not be acknowledged. The risk will only be acknowledged once you have paid the amount. So you need to verify the payment of amount also. So that's the role of auditor with respect to the reinsurance. Second area that we are looking into is FLC, free look cancellation. Now, what is free look cancellation? Best example, you do shopping on Amazon and Myntra, you place an order, you get a 7-day return policy. If once the product is delivered, you get a 7-day return window, correct? Okay, if the product is not appropriate, the things are not correct, the quality is not good, you can return the product. There is a return policy. Free look cancellation is same like the return policy of Amazon. Same. Okay, what free look policy says that as per clause 6(2) of IRDA regulations, there are regulations, okay, of regulations. There is a 15-day period available from the date of receipt of sorry, of policy documents. Okay, date of receipt of the policy documents to review the terms So 15-day period is there to review the terms. If you are not satisfied within those 15 days, if you do not agree on any of the terms and conditions, you can get a refund. If policyholder is not satisfied with terms, then he gets the refund of premium. That is a free look cancellation. 15-day return window, just like we have a 30 days, 7 days in some of the areas. So that's a free look. Now, what is the role of auditor over here? So the role of auditor is, first of all, when I say there is a free look window available, so whatever premium we have recognized, whatever premium received, the premium received is not to be recognized as revenue during this period, because during free look period cancellation can happen and we need to refund the whole premium back. So the premium is received till is not to be recognized till this period is over. Number 2, whatever request for cancellation is received, whether they are appropriately registered, whether the premium for such cancellations is paid, like we are required to pay back the premium. If premium is not paid, then appropriate liability is disclosed. So till the time premium is not paid, you need to disclose that as a liability. Okay. And if paid, then to whom it is paid, means correct person or not, what amount, you need to verify the amount is as per the agreement and the calculations. Okay, what amount paid, and whether payment entry posted. So these are the things you need to verify for the free look cancellation as an auditor. I hope it's clear. Any doubts till now? Ajay, can you rewrite your question again? That will be more helpful with respect to premium component. Can you rewrite your question again in a bit of detail? Thank you. Any doubts, guys? Any doubt with respect to the free look cancellation? See, I'll suggest you guys read, because if you'll read along with me, then it will be, like if you write down the notes, if you'll read after the lecture, before the lecture, it will help you to understand the topic in much detail. So I'll suggest, please read in detail, please read this particular topic, so that, whatever we are discussing, you will be able to understand. please, I'll suggest even after this lecture, whatever we are discussing over here, revise that particular topic, read that topic in detail, so that whatever we have discussed, you will be able to understand, you will get a clarity of the topic. Also, do provide your feedback, guys. That's very important for us. Very important for us. Okay. Now, let me ask a few questions on, like some of the basic questions that we will be discussing. Okay. So that, I can understand whether you have understood the topic or not. ABC Limited, it's a general insurance company. Prepared its financial statement as per Schedule A of the regulations. Okay. I'm not writing the name of full regulation, just regulations which are applicable. Mr. A of ABC and Company was appointed as an auditor. While auditing, Mr. A raised the concern that along with Schedule A, Schedule 3, Division 1 is also required to be followed, as company is following accounting standards. Now you guide what is the correct reporting requirement for what is the company? ABC Limited. ABC Limited General Insurance Company. Okay. Now you provide me the detail. What is the correct reporting requirement for ABC Limited General Insurance Company? Come on, guys. Pretty easy, nothing difficult over here. We have already discussed this topic. We have already discussed this topic. Come on, guys. What is the correct reporting way over here? I'm waiting for your answer, guys. What is the correct reporting over here? What is the correct reporting format? Whether Mr. A is correct, whether the company is correct. Come on, guys. Absolutely correct, Jay. I'm expecting more answers. Correct. Correct, Jay. Come on, guys. I'm waiting for your answers. I'm expecting for more answers over here. Okay, Vidula. Come on, guys. I'm waiting for more answers. So the correct answer over here is Schedule B will be applicable, not Schedule A, neither Schedule 3. Why? Because it's a general insurance company. So Schedule A will not be applicable. Schedule 3 will not be applicable. The applicable will be Schedule B. Remember, we discussed for general insurance company, Schedule B will be applicable. One quick question, another one. Same scenario, same. Okay. Now let's see how much of you have paid attention and how you can correlate. ABC General Insurance Company Limited having total receipts during the period or during the financial year 2021 rupees 100 crore. Okay. Appointed Mr. A as an tax auditor. Mr. A as an tax auditor. Now, Mr. A said that while performing the tax audit, okay, Mr. A reported areas. Mr. A reported as per Form 3CB and Form 3CD of Income Tax Act. ABC General contended that Form 3CD is not applicable to insurance companies. Now you tell me whether reporting under Form 3CD, under Form 3CD is applicable for insurance company. Pretty simple, nothing difficult. Now you tell me whether reporting under Form 3CD is applicable or not. Come on, guys. Whether Form 3CD reporting is applicable or not. Pretty easy, nothing difficult over here. You can just correlate with the logic. It's pretty easy. just merging the two topics. Reason because this will, enhance your clarity of the tax audit application also. Plus, on the same time, what is the requirement for the insurance companies? Come on, guys. I'm waiting for your answer. Okay, correct, Jay. Come on. I'm waiting for your answer, guys. Yes, correct, Jay. But again, I left it for a purpose out of the question, that area. But yeah, absolutely correct. Come on, I'm waiting for the answers. So in the current case, reporting under Form 3CD will be applicable. Tax audit is applicable, guys, to insurance company. There is no exemption from the tax audit. So Form 3CD reporting is applicable to the insurance company. So tax audit and Form 3CD both are applicable. Okay, so the contention that is not applicable is incorrect. Clear? Any doubt, guys? Any doubt? See, I have tried to cover the important areas of this particular topic. The reporting point of view, that how it is reported, schedule, like your schedule A, schedule B, then there are various parts of that schedule. Schedule 3 reporting by the auditor, that's an important part. So then we discussed about some of the provisions of the Act. Okay, one important section, Section 64 VB, minimum solvency ratios, how to audit few important areas like premiums, claims, then with respect to actuarial liabilities, contingent liabilities. So these are some critical areas with respect to the audit of insurance companies. But they are not only limited to this only, there are other areas also. So I'll suggest you read the study material in detail, come up with your questions, then we can discuss in detail your questions, and we will be able to, then you will be able to have more clarity on this particular topic. Guys, there is no alternative for reading. Trust me, there is no alternative for self-reading and self-study. You have to study, you have to read whatever we are teaching over here, whatever we are discussing over here. Then only you will be able to have the clarity. Otherwise, everything will go. If you feel, okay, during the lecture, you are not able to understand what that is being discussed, the reason because if you read a day before, if you read before in advance that topic, you will be able to understand. Otherwise, most of the time you will feel, okay, the things are going above my head. So I'll always suggest read before, start of the lecture, a day before. Be prepared with the topic, be prepared with your questions, no matter how silly they are. That will enhance your understanding and clarity of the topic. Also provide your feedback. That is very important for us to understand that what additional things you require and what additional details you need for a particular topic or from us. That will be very helpful for us. So guys, do provide me your feedback that whether you are liking the lectures or not. Okay. I hope you enjoyed the lecture. Thank you guys for participating and being present. We'll meet in the next lecture.